US headlines are still so very loud about inflation and interest rates. Meanwhile, there's a whole other story they're not telling you that's unfolding behind the curtain. That story involves central banks, China, and massive amounts of gold purchasing, all of which is signaling something the US and the mainstream media must keep a secret. What they're trying to hide from you hasn't been seen in over 50 years. Meanwhile, those who know have positioned themselves way ahead of the curve. And soon, it'll be too late for the general population to catch up, let alone recognize what is happening before the system comes crashing down around them. In this video, I'll show you why central banks have been stacking gold without you knowing, and what this means for the US financial system. Here it is, guys. The real secret. As US M2 expands, as they grow their money supply to try and inflate their way out of their massive $37 trillion deficit, gold reacts in a very certain manner. In this chart, US M2 overlaid against gold price, we can see that gold has a proclivity to react anytime fiat currency begins to lose its value. Pretty much right as US M2 bottomed, gold began to catch a bid and eventually hit a parabolic move upwards, leaving many traders caught offside. And the main buyers of this gold are central banks. They buy it by the ton to put the bars deep in their secured vaults. But here's where it gets bigger. Gold's rise isn't just about shiny bars and vaults anymore. It's about capital rotation into a neutral reserve asset while the global financial system suffers. Here's the thing. When central banks are ditching dollars to go buy bars of gold, that is some of the most powerful people in the world admitting that fiat can't hold its value forever. And gold is only one of two release valves the world has to escape the fiat debasement. Ignore this shift, stay sidelined, and you may miss the biggest signal financial markets have had in over a decade. Stick around and I'll show you some more proof on why gold is experiencing one of the largest capital migrations we've seen in our lifetime. Right off the bat, we're starting with a tweet from Ray Dalio he posted a while back talking about his experience living through a US default on its debt. And Ray Dalio points out a very crucial point after explaining how the US defaulted by depegging from the gold standard. What he pointed out was that his expectations was that the stock market was going to absolutely tank. However, it did the opposite. He said the S&P rallied 25%. And when he looked back in history, he noticed something very similar happened in 1933. And what Ray Dalio witnessed was capital fleeing from the dollar that no longer had a tie to any real value in this world. And that capital was now searching for assets that had a higher perceived value than just pieces of paper. At that time, it was equities and the S&P 500. However, now, inflation and debasement have become so great that these no longer cut it. However, there has been one asset that has stood the test of time for thousands of years, and that being gold. And central banks know this. Central banks have decades upon decades of experience with gold, and it shows in their buying patterns in 2025. Here we have the general trend of 2025 and central banks buying gold. It has stayed consistent throughout 2025. And this is no coincidence. As fiat currency weakens more and more, banks and capital will begin to leave it and will begin to find a new home elsewhere. Here's an interesting tweet I found while researching for this video. BlackRock CEO Larry Fink says the economy is cooked. Done. The US stands absolutely zero chance against its deficits if its economy can't grow at least 3% year over year. And then it also goes on to say that with these tariffs, the Trump administration has begun alienating other countries holding US debt and such, and then concerns are rising on who's going to hold this new issuance of US debt. However, we've made videos discussing that's been taken care of through the Genius Act and stuffing all that debt into stablecoin issuance. However, if the CEO of BlackRock, the largest money manager in the States, managing over $10 trillion of wealth, says the economy is cooked, we might want to pay attention. If the US economy is cooked, where is all this capital going? Well, it's going into gold, it's going into Bitcoin, neutral reserve assets, and guess who's been the biggest buyer of gold and net negative on treasuries the last 14 years. If you guessed China, congratulations, you are correct. China has not been a net buyer of US treasuries over the last 14 years. And in fact, they've been buying record amounts of gold. We can see here post 2011, when the world financial system broke, when everyone hit a debt ceiling, China said, screw this, we're out, we're going to buy real value, we're going to buy gold, we're going to put it somewhere where you guys cannot touch it. And you guys need to understand this gold bid is no accident. Banks, sovereigns, and other countries see the warning signs. They see the deficits and they see the ratios. And all of it is screaming, get out. Final chart for today is US debt to GDP overlaid with gold price. And to be honest, I thought it was going to look a little bit different. When we saw that massive spike in debt to GDP, I honestly thought gold was going to catch more of a bid. However, it just seemed to have a bit of a lag effect. But the point being, a country running 120% debt to GDP is unsustainable. And the world knows that. And they are now willing to trade dollars for gold and neutral reserve assets, ditching US treasuries, ditching $37 trillion deficits, and weaponizing financial systems. Now, if you guys enjoyed this video, drop a comment down below, hit that like button. As always, make sure you subscribe. Really appreciate all the support so far. I'll catch you guys in the next video.